Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in to this video, which is being recorded on the first day of 2025. Happy New Year, everyone. I would like to wish you and everyone out there a healthy and a very prosperous 2025. And again, that's why this video is being recorded on Wednesday, January 1st, 2025. And in my attire, you can see the polka dots, the circles, and those in some cultures are symbols of coins and money. And so they're symbols of a hopeful and a prosperous 2025. And so that's what I am looking for all of us out there. And here's a transition. I'm going to talk about how that will happen in precious metals in this video. And of course, gold against the 60-40. I mean, that's the root of it all. But I want to delve into some technicals and talk about why we are coming into potentially a really, really good time to buy gold. And so there is a historical element to that. Let me get to the video and the charts. So what I'm talking about here is how does gold perform after it's broken out to a new all-time high, but then it has its first correction and it tests the 200-day moving average. So how does it perform after it makes that test of a 200-day moving average? So there's 4 times this has happened, though I'm actually focusing on 3 because the other time was this breakout here in late 2007. And so this breakout did not hold. I mean, it only held for a quarter or two. And so this is during the global financial crisis. So we're just ignoring this right now because the current breakout, I mean, this is a clear breakout. This is going to hold. So this is much like the other 3 historically. So first, let's start with the first one. So here, this is when gold in 1972 broke out to a new all-time high. So in the 1940s and in the 1960s, it did have some periods where it traded up to $43 an ounce, $44 an ounce. So in 72, I mean, this was at the end of 71 or the very beginning of 1972, gold broke above $45 an ounce. Then it had this big run for about 6 or 7 months. Then the first correction, it bottomed at the 200-day moving average. So it happened here. Then, of course, look at this. Amazing performance after that. Now, the second was after the 45% decline in the middle of this secular bull market. So remember, the big decline in a gold secular bull market, it's really in the middle. So we had this here and this one here, which was 30%, kind of mild. So I'm tracking off a little bit here, but I don't see a big decline or correction in gold. So I completely disagree with those forecasts. Kind of find them nonsensical, to be honest. But anyway, we had it here in the middle of the bull. And so this was the second breakout to do all-time highs. Again, it came after this 45% correction in the middle of the secular bull market. So it breaks above 200 here. Then it has a quick 20% retest. Again, bottom to the 200-day moving average. What happened after that? It went parabolic. So 2 for 2 there. We talked about this one, which was a failure. Then you have this one in 2009 where gold breaks above 1,000, moves up to, I think, about 1230-ish, that area. Then it comes back and it almost tests the 200-day moving average. It gets pretty close. And by the way, this is a weekly chart, but I'm using the equivalent to the 200-day moving average. So it gets really close to the moving average, but from here we can call it close enough. And then great move like that, of course, into the secular peak. So here, this is a clear breakout. I mean, even though it hasn't broken out against the 64, this is a clear breakout. This is not going to have some big, huge crash decline, which, again, that's a lot of nonsense to me. That's not happening. But that aside, let me get to the next chart. So this is the all-time high breakout analog chart, and this is one of the charts in my book, which I am working on editing and putting in a few new charts, and so that will be available to the public in the next week or two. And so this is one of the charts from the book. So this is how does gold perform after it breaks out to a new all-time high? So again, we can see here the 1972 breakout, 78 breakout, the 2009 breakout, and in black, the most recent breakout. Then we have averages. So average, I believe this line is an average of the three. This line is an average of two of the three, the two that are weaker. So mind the averages. But here, the black is where we are here and now. And the black, I mean, it's kind of following these averages. So we will see what happens. I mean, it's a duh statement. Of course, we'll see what happens. But gold is correcting now. It has about 5.5% more downside to test the 200-day moving average. However, if gold goes sideways a little bit, that could end up being 5% or a 4% correction because that moving average line is coming up. But if we get a successful retest and at the same time we start to see gold break out against the 60-40, you could follow these averages. Now, it might take some time. It might lag a little bit because you can see this is kind of lagging the two averages, but that would be fine. I mean, if we're lagging these averages a little bit, we could still potentially by the end of the year, 3,500, maybe 4,000 in the next 15 months. So this shows the potential of, again, how gold can perform if it breaks out against the 60-40 very soon, like in the first half of the year. And so last chart, again, this is the crux of everything here, the real key, gold against the 60-40. And so we're at the end, or we're at the beginning of a new year. So I updated this data last night. You're the first to see it. And again, this is where we are. I mean, we're just waiting for that breakout move like we got here, Mind the 40-month moving average. And we can see we're actually, we closed, I think, let's see. Yeah, we closed above the 40-month moving average, as we can see here, 2.42 versus 2.36. And so we'll have to see, do we get a nice move like that in the next 2-3 months? Or is it going to take longer? We'll see. But again, the key to everything I'm talking about here, going back and looking at these, what happened here, what happened here, what happened here. And we can see the analog, again, the potential for a move like that. The key is, as I've said numerous, is this breaking out? All this historical analysis, this baby doesn't break out, that all becomes moot. But gun to my head, and it's just a guess, I think it's going to break out this year. I think it's going to happen. So you get a test of the 200-day moving average, and after that, a couple months after, whenever you get gold breaking out against the 60-40 portfolio, it's going to turn out to be a repeat of what we've seen in those other three examples. And because of that, at some point this year, it's going to be a really, really good time to buy gold. So that's the first video for 2025. Leave a comment. Let me know what you think. What are your expectations, your predictions for 2025? I'd love to hear them. Hope you're having a good week and an excellent new year so far. It's only been half a day or so. But again, leave a comment. Let me know what you think. Thanks so much for tuning in all the way to the end. And again, I wish you and everyone out there, your family members, your friends, all the best, healthy and prosperous 2025. I'll talk to you guys again in the next video.